This podcast is brought to you by Moneycontrol.
Hello and welcome to Moneycontrol. This is Jerome Anthony and you're listening to the Market Podcast. With me today is a CNBC stocks editor, Anuj Singhal, who's going to tell you what transpired in the market this past week and what to look forward to in the upcoming week. Hi and welcome to the show, Anuj.
Thank you so much, Jerome. Always good to be here on Moneycontrol podcast. Well, you know what? From the market point of view, there are a few highlights which stood out. For me, the big highlight was that after almost 1.5 months of outperformance, first real decline in the mid-cap space. This week, the mid-cap index was down 2%, while the Nifty was flat. So it's leading to some people drawing some unfriendly comparisons with last year, where again we had a very good first month for mid-caps and then a collapse in the mid-caps. I don't believe that is the case, but we are all entitled to our beliefs, but we are not entitled to facts. So let's see. The market will tell us over the next 1 month or so if indeed the parallels are right. I think the things are slightly different this time though. Also, what stood out this week was this continuous selling in large financials. And while you could blame IndusInd Bank on that Moody's report or that AGR ruling, some other stocks like SBI towards the end of the week and HDFC Bank towards the end did see a lot of selling pressure. So the bank Nifty is underperforming and the mid caps are underperforming. Nifty is getting a lot of support from Hindustan Unilever, Infosys. So, in general, you have seen a lot of safe haven buying all through this week, which clearly is something which stood out as we recap the week.
Right. Quite a lot of volatility this week. But I would like to ask you about the three specific stocks. So the AGR ruling, how is Bharti Airtel performing?
Jerome, Bharti Airtel, in fact, was one stock which we thought today, we in fact told it on the channel and that today would be the stock of the day regardless of the ruling. I mean, if it was a positive ruling, it would have been a financial relief. But today's ruling has completely ensured now, and now there are no ifs and buts, is that India is headed to a duopoly, a two-player market. And as student of economics, we've all learned that duopoly means both players make money. So that is clearly the case which stands out in case of Bharti Airtel. And it's, if you see the last quarter's numbers of Bharti Airtel, I mean, if there's one thing which none of us can live without, it's data. Even right now, we're talking about, telecom. All our viewers who are listening to this are doing this because they're consuming some kind of data. Right? So data is something which no one can live without, and it was free till now. It's something that you're paying for now. A lot of people saying that how much would a 30 paise increase mean? Well, you saw that in the numbers, and this 30 paise increase is not the final increase. You'll keep seeing data prices now going up for a bit. So my sense is that Bharti really is a stock which is coming out of multi-year bear market. And when stocks come out of multi-year bear markets, you don't want to put an upper cap on the stocks. You let them find their levels. Just like stocks in bear markets, no bottom is sacrosanct, no top is sacrosanct. So that's, I think, something that I would talk about on Bharti Airtel.
All right. What about the banking sector? Yes Bank has got potential suitors.
Yes Bank got potential suitors 1 year back, 6 months back, 3 months back.
Exactly.
And we've seen how the stock has done. Look, on Yes Bank, my view is very clear. And why did they delay the numbers? I mean, they should not have delayed the numbers. Even potential investors would want to look at the numbers. So I think this is something which I would personally give a wide berth. But there are a lot of people, obviously in last 2 days the stock's gone up. A lot of people who are willing to buy. I think this is more of an option trade in which you buy an option with the knowledge that either it will become zero or it will double or triple your money.
Okay.
That's what people are doing. At 35, you buy Yes Bank, and if the bank survives, gets capital, then it goes to 100 or it goes to zero. So that's the call that a lot of people are taking. If I was an investor, I would not have taken that call, but every investor has his or her own risk appetite. So everyone is fine with that. But I think in case of Yes Bank, you would have realized last time as well when they came that when they said that they have a bid, and then we found out that it was perhaps not the best of the bids. This time the names of the investors are really big, but let's see. Proof of pudding is in the eating. So I would want to see the deal fructifying before taking it. Any call on Yes Bank right now is a gamble. Okay. So if you're gambling, you do it with the knowledge that you can lose as well.
Alright, so probably mid-March we'll have a clearer picture on what's the situation at Yes Bank. What about DMart? It has reached a valuation of 1.5 billion.
Yeah, I mean, it was such a brilliant move. DMart came at IPO at 300. It listed at 600. It's today at 2400. So, at the end of the day, Radhakishan Damani is a pioneer of stock markets, and he's clearly turning out to be a pioneer of business as well. It's about scarcity premium. It's about not enough floating stock. It's about the market just not getting enough of a stock, and they've delivered growth. I mean, there's absolutely no doubt. Now, a lot of people are using, it's a horribly expensive stock. It's a stock which you cannot justify on any valuation parameter whatsoever. But look, at the end of the day, there's something called Lakir Ka Fakir, and there's something called being smart and investing. I think those who have purely gone by the classical valuation metric have missed out, and those who have looked at the simple logic of scarcity premium, buying a good business, they have made a lot of money. What more from here? I think I see no reason why it should slow down. It's a stock which almost everyone wants to buy on dips. Dips come. That's the point. Dips come, and when they come, you have to buy.
Right, Anuj. Lastly, let's talk about IRCTC. A couple of months back when it was listed, people had said the premium's quite high. It's listed at a high price, but now the stock is almost double.
It's more than double, I think. And look, I mean, I think this is one issue where I think merchant bankers left a lot on the table. I know you have to leave something on the table, but in this case, I think the pricing was horribly weak. And look, I mean, we all use IRCTC, right? We all use railways. It's a monopoly business, and profitable one at that. Ticketing, the catering, everything. So the issue with monopoly businesses is that you can charge any price. Of course, it has to be, because it's Indian Railways, they can't charge obscene prices. But this is one stock which my sense is that will keep delivering. The only thing is, how do you get in? And that is the issue, which I keep telling a lot of people. When you get into a name like a DMart or a name like an IRCTC, there is no need to hurry to book your profit. You have to just ride them, because once you exit these stocks, re-entry becomes tough. Right now, for anyone who exited either DMart or IRCTC, it's extremely tough to re-enter. So for these stocks, you just have to ride and see where the ride can take you.
Anuj, thank you so much for all these updates.
Thank you, Jerome. Thanks a lot. And to all our listeners, have a happy weekend.
Right, so that was Anuj Singhal, CNBC stocks editor, giving you a wrap of what transpired in the market this past week and what stocks you should track. In case you have any query for him, or in case you want him to talk about something, please do write to us at mcpodcast@nw18.com. I repeat, that's mcpodcast@nw18.com. For more news, views and updates, stay logged on to Money Control. Thank you for listening.